Hey, Daniel. Welcome and good evening.
Yeah, if anybody else wants to come up to the panel tonight, you can come up. Tawana, I know, is not going to be available this evening. And tonight is right up Eric's wheelhouse. So we're going to let him do a lot of the chat with regards to the tokenization of assets that we're seeing here. So we have a few people in Facebook as well. So everybody, okay, so I'm doing a little bit better these days. We're on Facebook, we're in Zoom here. Tell us what city and state you're coming from.
Hi, Tangi.
Tangi's here, Daniel's here. What city and state you're coming from. And in the meantime, we are going to get started. So, hello everybody. You know, if it's Wednesday, it's Blockchain Day. So welcome to Blockchain Chat. We are all about the business of blockchain here at Black Blockchain Consultants. That means if you're looking for a blockchain job, you want to start a blockchain-based business, you want to invest in the blockchain, whether you're investing time or money in a project, and ultimately you're looking to get in on this $3.1 trillion industry, then you are in the right place. So I'm seeing people here from Chicago, Alexandria, Virginia. We got Detroit here on Facebook. We've got another Detroit, another Virginia person here. So we want to welcome everybody in the building. So tonight's topic is right up Eric Spence's wheelhouse. Y'all know him as a Titan of tokenization, and we are talking about some of the tokenization projects that have happened. So many of you don't know this, but I keep a running list of just interesting items and topics that I find in the news. And the topics we're talking about tonight actually came out a couple of months ago, but we've had so many other things happening with Bitcoin halving and things like that, that we finally get to go back into the archives and get some of the other things that are happening in the blockchain industry. Don't forget, if you want to come to the BBC annual conference, it is going to be February 19th and 20th of 2021 in Los Angeles. We don't have any other details yet, but you can reserve the time on your calendar. It's going to be very low key. We're not going to have like a lot of speakers and stuff like that. It's going to be more of us digging into the technology. We are probably going to do something with Simba Chain and doing some smart contract stuff. We're talking about digitizing an asset and doing a tokenization exercise, like a real tokenization exercise. And you all know I love the strategy of business. So I'm also thinking about us dusting off that program that we have in blockchainstudies.tech around being a generalist and the types of questions that you would ask if you're going into a company to find out if they need the blockchain and how to even sell them on needing the blockchain if it's appropriate. So those are some of the things we're thinking of, but it's still early in the process. So if you have ideas, we're going to be there February 19th and 20th of 2021. So it's 2 full days of blockchain. If you have ideas of things you want to study, things you want us to go deep with and on, let us know, because we're going to be building the curriculum and program all around you and our members and what you are looking for and what you need. The only reason that it would be canceled is if there's an act of God or an issue with the virus still. Otherwise, Nadja Roberts has given us her place at no charge. So there's no like break evens that the officers and I have to worry about. So we're going to pay attention to what's happening with COVID and the rest. And as long as that's cleared up, then Sheree will be there. We'll be there. We'll have fun. We may do a Soul Train line, you know, all of that good stuff. So, so Sugar Hill Gang or something like that. We're older.
Yeah. You just really took us back there for sure.
So, yeah, so Daniel, actually, we may have you do some security stuff as well if you're able to come to Los Angeles in February. So with that, I'm going to let the officers introduce themselves. And we have quite a few new members as well. So we want to say welcome to all of our new members to Black Blockchain Consultants. I'm going to start with you, Dr. Keisha.
Yes,
Introduce yourself.
Yes, I'm Dr. Keisha Waddell. I'm actually the Executive Director of the Center for Blockchain Studies, which is our education arm of BBC, also where blockchain education meets wealth building opportunities. I always get hung up on it, but anyway, guys, I'm just really excited tonight. We are. It's exciting to even have to go back to some old topics because that just lets you know where we are in this blockchain ecosystem. I mean, there's so much going on right now that, you know, we've been doing this for what, 3 years now at this point, and it's just exciting to actually see these things come to fruition. You know, we talked about things and learned about them in their, you know, theoretical kind of sense and, you know, future use case kind of stuff. And here we are, real applications. So it's exciting to see.
Yep. Absolutely. Eric,
one other thing too. I'm sorry. Yes. One other thing. And we have got an announcement. We have live one of our courses, the LinkedIn course, optimizing your LinkedIn profile for blockchain. We are excited about it. I'm telling you, really great course. Check it out at blockchainstudies.tech. It's called the Blockchain Optimized LinkedIn Profile Course. Really great, actionable things that you can go right to. And as a matter of fact, I'd like to kind of challenge folks who are in our BBC. I'd love to see kind of a before and after, you know, of your profile, you know, after taking our course. So there's really actionable stuff there for you to see.
Okay, so then I'll add to it. We will give $20 worth of Bitcoin to the best before and after, I don't know.
Yeah.
Profile, yes.
So
before and after
learn how to screenshot right quick. And
you take your screenshot before, take the lessons that you learn from the course, do your screenshot after. This will be, so we're fortunate, it's July 1st.
Yes.
So this will be our July program.
Yes.
$20 worth of Bitcoin for the best before and after LinkedIn profile for blockchain.
All right.
Does that work for everybody?
That's exciting.
Yes.
Nice.
So
go.
All righty then. So so now we're putting our money where our mouth is, and we're going to encourage you to do that as well. So again, blockchainstudies.tech to get that LinkedIn course. Is there a code, a promo code? I thought I saw something.
Oh, for our Inner Circle members.
Our Inner Circle, yeah. So you have to be an Inner Circle member.
This is going out live. You got to be an Inner Circle member to get those codes. So
So you can join the Inner Circle, go to blockchainstudies.tech. We actually have the bundle where you're able to get membership plus Blockchain 101 course. And you can get the LinkedIn course at once. And if you email Dr. Keisha and ask for the promo for, you know, code for that, we'll make sure that you get that so you can take advantage. Okay,
yes.
Eric, tighten themselves.
Yes, Eric Spence, President of Blockchain Consortium International, as I am called here, the Titan of tokenization. Sometimes I consider myself a tokenization evangelist, or I don't know, maybe a tokenization cult leader. It feels like, because that's the way I just really deeply believe that this application, this specific application of blockchain technology has the potential to be truly transformative in so many different structures within, you know, just within finance. And I'm just really excited so you and I have this discussion tonight because, you know, whenever we see that specific application applied into different industries, it just has just a wow effect. I mean, to me, it's just like dropping an atom bomb on it, just because it allows people to do things that previously were you know, just unheard of. So looking forward to this discussion tonight. I'm always excited to talk about this topic. So yeah, let's do it.
Great. And Talisha?
Hello, I am Talisha Shine. I am the Vice President of Blockchain Consortium International. I'm the resident in-house tech person, so I always talk about things truly from the technical perspective. So as we have this conversation, I'm going to give you the very theoretical. We're going to, as Dr. Keisha said, we've moved from theoretical now into vocational. And with that comes some very specific tech challenges that exist. So I'll be talking about that this evening.
Great. And Talisha has finally allowed me to start selling her time to people. So there will be an inner circle price and then a regular person price. And yes, so we finally gotten to the point where we're going to be selling Talisha's time.
She broke me down now. She broke me down.
Yeah, we have weekly meetings, and then Talisha will tell us the 6 hours she spent talking to various people about the tech, and we're like, you need to start charging for your time. That's your vocational, yes. I just wanted to make sure that everyone knows, every once in a while I like to shout out our members that wrote books around blockchain. So this is Rob Morton's No More the Last to Know, a great book here. We also have Jackie Hayes and her teen edition book,
which has a course that
which also has a course on blockchainstudies.tech. Yes. We also have Eric Guthrie,
award-winning.
Make sure that you can see that. All of these are on Amazon. So for anybody who is new, every once in a while I like to show off our BBC authors. If you are a BBC author, you send me your book. I'll hold it up every once in a while, let everyone know about it. We'll also invite you to come and be one of our guest speakers. And my niece Richardson within our group, she runs the Thought Leadership Program. So she'll reach out to you as well so that we can get you on our Thought Leadership panel. We're trying to create a Black Huffington Post type of network where once a month, our thought leaders will contribute some sort of article, and that way various people from outside can find us and know that we're thought leaders and hire us for specific engagements. So that's what we're working on right now. The final thing, if you're new, because we have a lot of new people, The Real Business of Blockchain. This is our book club book for the next few months. Every fourth Monday in the month at 7:30 p.m., we have an inner circle meeting where we go over our book. So those are very, very interesting, dynamic, and in-depth conversations that we have around the real business of blockchain. And it's actionable. It's things that you can go into your boss's office and say, I know this, I know that. And don't forget to ask for your 10% raise. And then don't forget to come back and tell BBC that you got your 10% raise because you know about blockchain. But yes, and we've had this subject for the last couple of months as well. So if you are an Inner Circle member in Flock, you'll see Inner Circle meeting replays as a channel, and you're able to hear the replays from the previous month. So we're starting up with that again as well this month, the fourth Monday of this month, which is going to be July 20th at 7:30 p.m. Do we have any other announcements before we get into the topic of the day? All righty then. So we have 3 articles that I'm going to share. I'm going to do the first article, then come to my group, do the second article, come to the group, third article, come to the group. So let us start off here. So I'm going to start off with actually just talking about what the secondary mortgage market is before we go into the first article, because the first article is about putting these secondary HELOC loans on the blockchain. So you may not even know this, but some of you may. If you own a home, you have seen where you go in to the mortgage broker, you sign with Bank A, and all of a sudden you get a letter from Bank B saying, we bought your mortgage, right? Or private investor. This is a secondary mortgage market. And it's simply where Bank A bundles a whole bunch of mortgages together. They repackage and they sell those mortgages as securities to institutional investors, other banks, large pension funds, insurance companies, or even the federal government. So this happens all the time. Again, if you own a home, you've probably experienced this. Well, there's a company named Figure Technologies that securitized $150 million of HELOC loans on the blockchain. So Figure Tech has completed a long-awaited $150 million securitization of a bundle of home equity lines of credit, billed as the first such transaction in which all aspects of the process were managed on the blockchain. Everything from the origination of the loans to the issuance of the bonds to the collection of the borrower's monthly payments is run on Providence, which is Figure's blockchain. This distinguishes a transaction from most enterprise blockchain projects, which have either been demonstrations of the technology rather than live applications, or touch just one piece of a complex process. One company may take the consumer's application, another may fund the loan, and another will sell the securities to investors, and still another will mail the monthly bills and send notes to late payers. That's a simplified version. By automating all of these steps on Provenance, which is again their blockchain, Figure says it can speed up the process and cut expenses. It costs us significantly less to originate loans on blockchain, according to their CEO. For example, managing the information on one ledger can minimize errors, ensure those that do occur are caught and fixed sooner, and eliminate fees for things such as transferring the loan between parties. Figure says it can approve a HELOC in 5 minutes and fund the loan in 5 days instead of the typical 30 to 60 days. The firm claims its technology could save $30 billion in costs for the $3 trillion annual securitization market if applied widely. Again, I'm gonna read that again. Firm says its technology could save $30 billion in cost for the $3 trillion annual securitization market if applied widely. There's still skepticism about the potential benefits of blockchain adoption in the traditional financial services space, where centralized systems are seen as more efficient. A simple XML ledger is far more efficient. This is according to some Wall Street banker. Using blockchain in finance is like learning Urdu to enhance enterprise security. And by all accounts, getting Figure's first deal done was difficult. So they talk about the difficulties that they had with it. Next steps here. Provenance is different from the blockchains underpinning cryptocurrencies such as Bitcoin. For one thing, it is public permissioned, meaning that while anyone can view the ledger, only authorized parties may write to it. And that is the end of the article. So again, I thought this was interesting. I read it, I think it came out in March. So I read it a few months ago, but we're finally getting to it today. So who wants to go first? What do you think?
Okay. Well, first of all, let me just say this. That almost to the last paragraph where it says the long haul, and the person, Chris Wallen, who's chairman of Wallen Global Advisors, a longtime Wall Street analyst, he says blockchain is a really bad way to do almost anything. You already see this person here is pretty much already has their biases in place. So there's, no way that they're going to be receptive at all to any kind of, transformational change, come from blockchain at all. So I just kind of just see that. Now, all of this being said, you know, one thing that's really interesting about this whole conversation, let's be honest, this is part of the thing that kind of led to the whole 2008 crash, right? Was them packaging all of these loans, and the loans that, probably, mortgages probably shouldn't have been issued in the first place. And then they just kept passing the buck from one to the next, to the next, to the next. And the thing just kept building up like a big snowball over and over and over again until it eventually, crashed through the front door. But I guess for me, I do look at it, and I absolutely do believe anyone here who has ever, had the experience of buying a house or buying a piece of real estate know just how intensive it is of just, man, by the time, you get a writer's cramp. You like, okay, I got another thing to sign. Like, what is this? Okay, well, this is a sign to make sure that you witness it. That you just signed it for was legitimate. So, we see all of these steps that have to be in place in order for these transactions to take place. And I guess, we do, I think most people look at that and they go, wow, there has to be a way that could be much simpler to that. And blockchain's ability to be able to instantly verify transactions, and if anything has been tampered with, to be able to know immediately that it has been tampered with, and to be able to course correct very quickly. This industry seems like it's right to be disrupted, I guess you would say. Mm-hmm. So there will always be the legacy players that are in place that do not want to see this, will push back against it. No, it's always worked, fine for us before. Why have any kind of change, take place? No, you're going to cause more problems than you did, before. Just leave it as it is. So I do kind of feel that we will receive a lot of that, and to me, that will slow a lot of the progress happening. But I'll be interested to see kind of how much further they are, able to get along.
I kind of noticed that they acknowledge that what's really needed to really forward things along is to have, the infrastructure to expand, because certainly this is a permissioned blockchain situation. It looks like they might even have a consortium going or something where they're able to pull some off-chain data into their system. But it definitely will be empowered situation for it to be truly decentralized. It's still centralized in this case, but again, many of these projects are, and they still are absolutely realizing some real gains in how long the process takes. I think it went from like 5 days to from 30 or something like that. That's
30. They said 30 to 60 days is average. Mm-hmm. Right now it goes to 5 days. So yes,
that is,
and it saves $30 billion a year. I think it was 30 billion, whatever. I mean, I'll go back and find the number again, but yes, there's a huge, 30 billion. $30 billion saved a year.
Wow, right? My
goodness. And that's just on HELOCs.
And I was just about to say, because I looked into the company and I see that they've reached out using the same use case for student loans. So I thought that was wonderful, because I know for me, I definitely have a student loan, and I've experienced that switching around with the loan thing. So, this is awesome that, we're taking the on board, we're onboarding. It's not decentralized in the most ideal sense, but this is a tremendous leap forward in the use case of tokenization or securitizing an asset. Mm-hmm.
So the one thing that I disagree with, and we had talked about this a long time ago, I don't think that these companies will ever truly decentralize. I don't believe it. So I'll be the naysayer, the negative Patty when it comes to that. They did say that this is a permissioned system. Mm-hmm. I can see them doing a permission system, but even within the various topics we've had, there is a huge concern about security, from one company to another, keeping corporate secrets from one company to another. And at least I can't. I could not go into a C-suite of a Fortune 1000 company and convince them to decentralize. I haven't seen the real business case for it, where I thought, okay, yeah, Marriott and Hyatt and Hilton are really going to decentralize and share all, their information on the chain. Even though I know that there's information held off the chain, I just don't know if logically they would agree to that.
Well, I always felt like it just like in education, we talked about when the computer came, everything would be paperless. We still have paper. It's less, but we still have paper. So I always feel like all of this stuff will still coexist because there's still use cases for, each situation. I do believe that there will absolutely at some point be a situation where, real common information is shared, on a public chain, to be sure, particularly once zero knowledge protocols and whatnot like that get kicked in. That's going to add that security layer that will be hugely helpful. And certainly once user interfaces and the user experience is much more, easy and that kind of stuff, it just will be a total no-brainer,
Okay, now, okay. Let me just offer a counter perspective on why I believe decentralization is the way to go. And that is the point of, listen, with competitors, like if I were to take, my industry as a music publisher, okay? Mm-hmm. Okay, wait a minute, someone. All right. If I were to take me as a music publisher, okay. If Sony or Warner were to create the blockchain solution, we're not going to use it. You know why we're not going to use it? Because they're pretty much going to be our competitor in some point. And then what's going to end up happening is they're going to receive the overwhelming majority of the value itself. I don't care how much more efficient it would make it. Oh no, everyone, it'll make it great for you. Yeah. Okay, I get all of that, but the overwhelming majority of value, like, you're going to receive. So the only way for us to do this is to make it decentralized, so that we can all be on a level playing field, so that we all can know, okay, I see where you are, you see where I'm at, we see where our other competitors are. Now we can all play nice in the sandbox. And so, and to me, I just feel, as we are now in this experimentation of understanding how important it is to have data integrity and the value of data itself, I just believe that, to me, decentralization is the only answer of where we are going to. And I'm not saying we're going to get there next year, or maybe even within 5 years from now, but I see it long term. That's the only answer. That's the only thing that's going to work, is we will eventually get there. And blockchain has already set us up for that, to be at that place. So that's me, Shereen. That's where I come from with this.
I'm gonna kind of blow the
bridge everybody.
Okay, all right.
I'm gonna just like topple everything here. Okay, so in the article, it mentioned how simplistic XML database would be, or I think that's what he called it. So this is where semantics, and I'm going to always harp on this, they may not be using blockchain in the true essence of that. Like we talk about from the business of blockchain, we know that those 5 pillars, they could actually be using DLTs at this point. DLTs are very simplistic. They are the rudimentary factors that can easily be, interchangeable and give you that same bang for your buck. Sorry, Eric. So with that, that's again where what you're calling it may not be. So that's the first aspect. As for decentralization, there is a modicum of that with regard to, this is the hybrid aspect, where we have, just think about the internet. Everybody participates in the internet in order for that information to flow, but most companies still have an intranet. where there's blocked off and there's permissions. So we're going to have to see that in some kind of capacity for you to participate, given all the data variables that are needed and required, which are going to be the standardization, which is going to come from this aspect, because we're going to have to enforce standardization. Standardization doesn't always mean centralization, though. I think we have to decouple that, because the minute people talk about standards, they instantly say, oh, well, that means there's a singular entity. No, it does not. It just means that the standard of the data and the variables and how they have to connect, that's community. That's how you promote connection through your community. So we'll see these things happen. I think what happens with this particular industry is that all the data points are very everywhere, and they're siloed at this point, very much so, because they need that's their commodity, is the data. Once you remove the data and make it kind of a free-for-all, they lose their ability to now have a revenue stream. What they're failing, this is the short-sightedness of them, is that they actually can increase their revenue streams, as again we talk about in that book. If you're utilizing and leveraging that data in a different manner, now you have actually quadrupled the ability. So now that data can be used in a multiplicity of ways, in a multiple streams, and now they can actually leverage it in the sensibility through their own internal DLT system or blockchain, and then external to it. So they're actually getting more revenue streams if they would understand how this could fit. They're looking at it from a top down. This is actually a bottom up structure. The data is the most important thing in all of this. That information, who, what, when, and where, to collect all of those mortgages or student loans, that information is the most viable, because that's the people. That's who the entity that belongs to. And so subsequently, after that point, the individual will have the ability to have a token with regard to their own data. The company then has to, award that, and also they can sell it from another perspective, just as they sell that information to mortgage lenders and student loan people, that all that information is resold. Now we have a connected community that will again leverage all of the pieces of the true aspect of tokenization, while we're still in a blockchain inspired concept. So that's what we're looking at. This is kind of like a convoluted picture, but it starts to become really interesting when we start to level it out, where everybody can participate. And as soon as we get that, like I said, once we take out the silos, it becomes a circle. Instead of stair-stepping it across, it becomes an ecosystem rather than just a wide open playing field.
I get it. No, that's right.
Yeah. So, but the question is always, I'm coming at it from a different point of view. Who do you have to convince? And there are a lot of different people, because there are a lot of different interests that are always out there. And then what do you need to convince them of to get them to say yes? And that's a rhetorical question. I don't mean for it to be answered tonight.
I think the book says that, like our book.
Yeah, it's a complex.
I'm just saying why they would do it is the increase of validity of their data, viability, the customer actually requiring something of them, and again, new revenue streams. So it's going to force them. There is definitely an incentive to do this. And it's actually decentivized the more that you don't want to do it. Because the more people, there are going to be people who are going to do this. This project is going to show just that, again, it's one of those use cases, that glaring number of.
It's a great use case, actually.
Yeah, you showed me that this savings, that's hard to get away from. Like, you just saved me $30 million. So that's going to be a very strong issue when somebody puts that number and says, if you don't, you're going to be losing money. It's not like, oh, you'll just be cutting even, you're losing money. When they do that becomes the trigger. It's like, we're not going to be competitive because we're losing, and we still have the commodity and we could leverage it. Now we just don't know how, and we're forced to participate.
Right. So then my final question would be, and again, I don't have the answer to this, but companies, let's say they save $30 billion, right? Do they pocket $30 billion? Do they pass the $30 billion back to the consumers, or is it a hybrid? Are consumers going to be smart enough to say, oh, I've got bank A, bank B is offering me a lower fees in order to work with them, so I'm going to go with bank B. Again, it's a messy answer, But I'm curious over the next couple of years of seeing what that answer is going to be.
I mean, it's a competitive advantage. I think
I
that's
was
the
going to say,
competition. You have to have, it's just like cable network. Everybody that has a service that comes out and says, oh, yes, we can offer you this. It's either
we can dish,
or it's a value add. Either way, you're going to get people like, oh, that sounds great. Sign me up. The more you have that, now it becomes a standardized option. Before it was like, oh, it's nice to have. And the minute that now it changes to a standard option, you got to up the ante. So everybody's going to compete. And I think that's where the ecosystem really evolves, is that we can now leverage the data in so many different ways that now not only are you saving the 30 billion, but now you have maybe even additional revenue streams. So you're making more money. So there's going to be a lot of incentives to actually participate. It's just going to be like getting that loose rein. Like, how do I say this to you and get you on board, because you're going to be hell bent on keeping it so tight to you. But when you see that you're losing money and or losing customers, that's going to become a very pivotal aspect in your business.
Well, you know, there was a time when you would never, ever go to a bank that didn't have, 50 local branches in your area. And now you've got young people who will go to an online bank and sign up with a bank that has no branches. So are we going to get to a point where we're able to do mortgages with companies with no brick and mortar? It's just this online, global space. And then some of the other things that we're looking at is, okay, they're starting off with HELOCs. They'll probably go to, like Dr. Keisha was saying, student loans, private loans that are out there, peer-to-peer lending, all sorts of applications. So when it comes to blockchain jobs, when it comes to blockchain-based businesses, looking at opportunities like this, I think, is so important, and figuring out if this is something you want to major in, figuring out who the players are. This technology is so new that you probably could get to the CEO or people pretty high up in these companies and have conversations with them and even join, their staff, if that's something that you're looking at. So y'all know how I am. I like to bring it back to the business of this. And if this is a business that you want to be a part of, then figuring out how you can, get the networks that you need. So I want to go to our second article here. And may I say, there's a brother here in the picture. So this is Vertalo to tokenize 22 securities worth $200 million on the Tezos blockchain. Again, this was in March that this happened. So the partnership will see Vertalo tokenize 22 different securities issued by DealBox's clients, providing data management services and providing liquidity. Hendricks, who is the co-founder of Vertalo, Hendricks told CoinDesk his company is essentially a technology provider for this partnership. While Vertalo can work directly with issuers, the company prefers to work with channel partners. And I thought this was interesting as well. Channel partners are just a way for you to distribute your technology out there. The private assets are a bigger market than public securities. Again, we're going back to private assets. Because of the antiquated methods for asset management and for ownership of private assets, owners of private assets cannot obtain liquidity. Hendricks said, saying tokenizing might be able to boost liquidity. The partnership would help build out market infrastructure for digital investments. So that is the end of this article. So again, they have more than 20 companies expect to tokenize securities on the Tezos blockchain, representing $200 million in deals through a new partnership with fintech merchant bank DealBox and software provider Vertalo. So we've been talking extensively on that. I know Eric is really, really passionate about this topic. So I'll open it up to my team here. What do you think?
I mean, the thing for me, why Well, one aspect of tokenization, why I really believe in it so strongly, is anytime that you can make an asset programmable, once it's digital, it allows you to do different things that previously in its current state, I guess you would say non-digital state, many times it's either very, very difficult to do or just nearly impossible. And I just look at that and the possibilities just become endless. I think I spoke about this one time before. This one company, Tawana, sent me a video, and the one company was looking at tokenizing their equity, but and they were looking at tokenizing specific loans against certain properties, but as you were paying back the loan, you were receiving back your token. So if you, for whatever reason, weren't able to fully pay back the loan, you didn't walk away with nothing. You still walked away with a portion of what you paid back. But outside of that, that would just be virtually unheard of. No one would allow that. But what I also like, and I think if we really want to be honest with ourselves, Bitcoin itself, and Bitcoin, not blockchain, but Bitcoin, has really accelerated people to really get on the ball and start thinking about different ideas and pushing and advancing and progressing in ways that they wouldn't have done before. And I believe that this is what tokenized equities and tokenized securities is going to do in the security space, is ideas and things that people would say, no, we won't do that. No, it's always worked this way. This is how we're going to do it. Because of the advancement in the technology, is making people go, okay, you know what? Yes, let's do this. And then they start pushing further and further ahead. So I'm just looking at it, to have that kind of effect on it. Paper Chain, they are tokenizing, taking loans and tokenizing against the future royalty streams for music artists and songwriters. That is, pretty. I mean, that's pretty advanced. And I just look at things like that and I go, okay, great. And I just begin to see that then applied into just other areas in the securities market.
I would say I think we've seen another crucial aspect with COVID. COVID came in and people needed liquidity for their assets. It was like, okay, I can't take all of this stuff. There's nowhere to take it to, first and foremost, but if I have to leave, this is where that comes in. So I think that also is a true kind of spawned a different mentality of what do you do when you have these physical assets that have value, but I cannot move them. There is no way that my liquidity is transferable quickly and easily and safely. So now we have that problem again. And that's always been the problem. People say, hey, how can I have to leave the country, I'm fleeing, but I have to, where do I take my stuff? How do I get the value for my stuff? So this has been around, and now we just have a way and a mechanism by which to address it. So now we have to build the infrastructure to address this issue that we can clearly define. We know the parameters by which, where the safe gaps are. And now we can have to build the structure in order to support the ability. And I think that does give the creativity, where I think sometimes the mother invention is a creative mind. You have to come up now, how do I digitize my asset in order for it to now be available to me, instantaneously? How do I get that? Where do I store that? What is the value, even if I leave borders? What if it's an international border and now I have to go somewhere else? So I think now, again, we have structure that's really important, and people always say, oh, we're just going to be, kind of like anarchists. No, we understand that countries are going to have to do that, but that's the whole point, that there needs to be some level of standardization so that the market can move itself, because that's what it's really fighting up against, because we can build it immediately, but then it's the execution and implementation of it that's stalled by the regulations and the inability and inefficiencies. And the US is definitely lagging behind. A lot of other countries are moving much more quickly, giving that, that instantaneous aspects to a lot of things within their own borders. And then again, they're sharing it with others who are stepping right next to them. We're very much kind of, stagnating on our side and trying to regulate the unregulable in that sense. We're trying to make it like, let's try to make it as just like it is right now. We are not staying in this system. If nothing else has been proven, COVID showed you we can't stay in that system. It's not sustainable. So now it's kind of forcing the hand, and they're still trying to, hold on to the good old days, and the good old days are gone. So we have to give it up.
Can I, Talisha, especially speaking about COVID, and I just say that because one thing happens, like things don't happen in silos the way people think that they do. Things happen in one thing, and it completely affects everything else. I don't know if anyone saw that quote that the CEO of Airbnb said. Like he said that he said for travel, he said that we will never, he said we will never go back to the way travel was prior to COVID. And he said that we are looking at a decade's amount of change happening in a few weeks.
That's correct. I would definitely agree.
I would agree with that. Absolutely.
I'm just saying, like, we just think about, I would say, people need, analogies. I'm thinking e-commerce wasn't in existence. Think about it. You could not purchase something without going somewhere.
Right.
It was impossible, right? If you wanted a book, you had to go to the bookstore. It was never the library. You had to physically go somewhere. So e-commerce is a brand new concept, truly, for most of us. Yeah. So if we take that and just simply kind of ramp that up into a couple of years from going from nothing, where, you could only buy, a book or this or that, to now what you can buy literally everything online. If we could condense that into a very hyper extended period of time, like right now, that's what we're going to see in all areas of business.
That's right.
Because now we have the accelerator, but now we also have the infrastructure.
Right.
So before we had to build it. We didn't have it. You're like, that'd be great if I could buy something on the internet. How do I do that? You had to build that. So now we have that, and we have a catalyst. So those two things together truly make this very exponential amount of change in a very short amount of time.
Exactly. So
that's what we can see.
And because the tech part of it is the part that is, eludes people so much, you really brought out a really good point. The way you can get into this space is be that person who's like, okay, now that we have this, I wish we could do that. Or, you know what I'm saying? Now we can, it's really limited only by our imagination now.
Very true.
As you've mentioned, the tech is here. The tech is here. We see that it can go. And the more that we have examples of these, offshoot, successes, the market starts to drive it, I don't know that people are really looking for this kind of stuff yet in the news, but, once it becomes kind of mainstream, if it hits somewhere, hits around a game or something, becomes a commercial, maybe people will be like, oh my God, and it'll be one of those situations, again, to use an analogy, like when you call somewhere and you actually get a busy signal on your phone, you're just like, what can you not have answer machine or whatever, or some kind of something, you just don't expect to have that anymore. So things really have changed in that sense that
we've seen it, just like I said, with COVID. Half the restaurants didn't have curbside service, didn't have delivery. I mean, that changed immediately. And it didn't take like, we have to have a discussion. We have to go to hell. It was like, I need you to come to my house. Can you bring that to me? And they're like, okay.
And then once one person did it, everybody started.
And it wasn't like, they didn't think, this would be so nice for our customer. That customer called up and said, I need it, and I need you to bring it to me since I can't come. I'll give you some 5% extra. It instantly was, the market drove that. And that's what happens when people were lagging. They're like, we can't do that. We don't offer that service. It instantly changed. And now the pushback is, now that certain states have opened, they have dropped that service, and they're like, oh no.
Oh yeah, right.
Give it to me and take it back. That's don't do that. So now it's like, it's a standard that has been met. And now that you fulfilled it, you can never go back. It was a value add 2 weeks ago. Now it's the standard, and you can't move backwards. And that becomes the really interesting part, is that once we start making these changes, it's very hard to retrofit and go backwards. You have to give a reason, and there people are gonna like, oh, never mind, because we're fickle. We're very finicky, and we want what we want when we want it, how we want it. And that's the first time that consumers truly had that say, is like, I will instantaneously go somewhere else because I have the advantage. I'm not out of anything by sitting at home, and you say no, swipe.
Mm-hmm.
Yes. Here you are.
Yes.
That nobody is inconvenienced by forgetting who you are.
Mm-hmm.
Like that you are very much present of mind, that instantaneous thing. Like if you can do it, yes. If you can't, oh well. And that's where we live. So these are kind of the structural changes that consumerism is actually causing. And again, the tech is just supporting that. And if they don't, they can ramp themselves up. But it's very hard. Like I said, we can't retrofit solutions anymore. They're kind of moving forward, and you got to catch them now.
Well, I want to go to our final discussion.
Eric's got something.
No.
Well, hold on, Eric, if you don't mind. I want to go to our final, just really, really quick, because this is about tokenization on the federal level with federal grants, and then we can come in and wrap up the entire conversation. So tonight's discussion has been, interesting with regards to the different things that are being tokenized. And now we're moving here to the U.S. Treasury Department is trialing a blockchain-based letter of credit system to track federal grants efficiently. The Treasury Department is working with the National Science Foundation to tokenize the details and payments in federal letters of credit. The NSF has a budget of $8.3 billion to fund research in U.S. colleges and universities for fiscal year 2020. By tokenizing the letters of credit, the NSF can track the payments and ensure that the recipients meet the terms of the grants. Additionally, reporting requirements could be eased for recipients. This is really huge because it's a pain in the butt to administer these federal grants, if anyone has ever been there. Blockchain letters of credit enable peer-to-peer fund transfer, and recipients need an electronic wallet associated with the bank account to receive the tokenized letter. With blockchain, access to the letter can be restricted to specific persons. The Treasury Department is leveraging a permissioned enterprise version of Ethereum and has developed the platform in collaboration with San Diego State University, Duke University, and NSF. So again, I wanted to share that final article so that we can see how tokenization is happening in different areas of industry. So Eric, go ahead.
Well, I'm just going to say this, and as I look at these different use cases, this is just my belief. This is a core belief I have about tokenization, and you heard it first here. So listen, when we see all of these are great when they come through the channels of enterprises, of course, with the federal government. But to me, mass adoption will come when it is scaled down and the everyday user is able to apply this, to apply the technology into their life and to solve a problem in their life. And it only takes us seeing a few people doing that. When we see that happen, then to me, then the doors will be completely blown off. It's the same way in which we started seeing when people started YouTube channels, as we're on one right now. And oh wow, you know what? I could do that myself, and that sort of thing. As soon as we start seeing that happen, then to me, the accelerant for that, it will go very, very quickly. But to me, that's the main thing that I have my sights most sit on. It's the everyday person, the everyday user, being able to take and apply the technology into their life to tokenize an asset and then use and leverage that asset then to better their own financial situation. That's what I'm most looking at.
I agree.
I would say that the best, again, I would say a use case for right now, again, with COVID being the issue, restaurants closing was a very big thing. They couldn't be solvent because they relied on customers. But what if they could tokenize the equipment, the building itself? They could have paid payroll and still stayed solvent
Right.
they wouldn't have had to go out of business.
That's right.
This is a business use case, and that I think people would think about it differently if it's not just, you know, your business, but truly the business assets, thinking about your business as a totality from your physical as well as your digital assets could have remained and kept some businesses up and running and being solvent and able at least to get past this part. They may not have been, you know, again, making a profit, but definitely keeping, you know, that level of equilibrium for themselves, for the solvency of their company, and for their employees. That could have been a very viable case for them to do this in.
Felicia, that should go viral.
I was just about to say that was a
that should go viral.
case right
I
there.
thought about it instantly. I'm like, if you could have tokenized all that equipment, because all that equipment is a big deal. Everything in there. I mean, the spirits are sitting there. The food itself is there.
Yeah.
These are the kind of things that when you, again, this is where business comes in, and that's why you have to look at it. We're taught to think about it this way. But the minute that you open up and say, well, what is it for me? What is this thing for me? It's my business, but I have this $45,000 oven that even if it's not used, I can still pull some value from it because it's $45,000. Like, it's going to be used at some point. It's just not being used now, but I don't need it in that capacity. I need it to be liquid.
That's right.
So why could you not move? That's what I'm saying. We have to, it's a mindset shift in that these things have value, whether they're being used in the manner in which we think they should be used in. But that to me would have definitely, I think, assisted, and that's where you could see the bigger bang if these restaurants could have done that immediately. And then, like I said, hold that just reserve and say, okay, I need to tokenize it from this point on. I need this amount of cash just to get through maybe 6, 7, 8 months. And then let's see what happens.
Well, you know, just thinking that way and giving that awesome example, just, you know, with me being an educator, just makes me realize what is a real transferable skill, you know, for the 21st century future readying of students is really being a critical thinker, you know, critical thinking, you know, somebody with a growth mindset. You know, there's just not one way to do that. We really have to, you know, change the way we teach, you know, because that kind of thinking is what this new environment requires. You know, we're always going to be dealing with sticky situations, you know, tough questions that no one person is going to have the answer to. We got to learn how to collaborate. I mean, as we see, the businesses can't even thrive, you know, any longer unless they collaborate to keep going. So, you know, there's just a lot of, so I've gotten on a whole nother topic there. That's education.
Yeah, I wanna piggyback on this, and we're gonna get off topic a little bit, but everybody on Facebook, everybody here, just roll with me on this. Critical thinking is one part of the equation. Being able to communicate those thoughts is the other part. And I'm bringing this full circle with the 10K Project. So for those of you who don't know, 10K Project, the10kproject.com, the10kproject.com, might as well just promote it since we're talking about it here.
Just pulled it.
So critical thinking is, you know, we have an ability to fund Black businesses by doing equity crowdfunding. However, we have run into people saying, I don't even know what equity crowdfunding is. I don't understand this. You know, we've gotten a ton of questions, and I know Tawana's in Facebook right now, a ton of questions with a ton of education. So what Talisha said is great, right? We can all understand it, but could we explain it? Y'all, forgive me, my co-founders know this. Could you explain it to Sister Jenkins? Who has owned the barbecue shack down the street for 40 years. If you cannot explain it to Sister Jenkins, it doesn't matter how great of a critical thinker you are, if she can't understand it and she can't implement it.
Well, I think that's exactly part of it, you know, being able to take a complex idea and deconstruct it critically. And apply it, as you mentioned, Eric, and as you're saying, Cherie, in a way that speaks to the person, you know, and it just starts with, what if we could do something? Wouldn't it be cool if we could do that? Well, you know, there is something that allows that to happen nowadays.
And then you also have to have I'm sorry, you also have to have the person on the other end who's asking, why would I buy a tokenized asset? What is a tokenized, you're tokenizing an oven. What are you talking about? How am I going to get my money back? You have, so you have to be able to sell both sides of the equation. And all I'm saying is it sounds great in theory when we're talking about how to do this, but without that real life use case and without that real communication strategy, it's tougher than it seems. And then that goes back to Black blockchain consultants being worth 6 and 7 figures, because he or she who figures out the use case and how to communicate it to the lay person in a way that mass adoption occurs is going to win. It's not just let's create a use case.
Yes. You do have to rest
really
people's
feel
minds.
that, and I feel like we need to be honest.
But but you still are speaking to what I'm talking about too. You get people who just glaze over, and they're just okay to glaze over. Ask a question. We will have all kind of dialogue with you. Don't just glaze over and be okay with it. Ask a question. Ask a follow-up question.
Relativity. That's where we, all the time. I kind of have the conversations in multiplicity of areas because, again, I'm speaking tech most of the time. People are just like, what is the tech able to do? And I'm like, anything. It's able to, clean, cook, do whatever, change your sheets. What do you need it to do though? And then they're stuck because they're just so enamored with the functionality. It's not always about the functionality because we can make it do what you want. You have to tell me what you want it to do.
Well, I would like the tech to do my laundry tomorrow. Yeah. So if you can get the tech over here to do laundry.
If you had a smart laundry, you could just call it, put it into your phone. It would do it. I can't make it put the clothes in there yet. I haven't figured that one out.
See,
we'll get you a robot. We gotta get
I need the robot who can go up and down the stairs, grab the laundry basket.
Be very careful what you wish for.
Yeah, like that's our robot.
And then you get it, and you're like, oh, this robot, So, but I'm saying these are the kind of things where we start with, again, I always say tech is going to support whatever. So don't get caught up in the back end. It really is the business. What is the business functionality? What is it that you really needed to do? And what is the expected outcome? You may say, I like it, but what happens? What do you want it to do at the end? Not just during the beginning. Oh, it'd be so nice if it could. How do you want it to do that? Do you want it to do your laundry only, or do you want it to launder and dry? Do you want it folded?
And fold.
Yes. See, you added extra. I need to fold it. So each of those things all have to come into play, and you really have to articulate that. So I also think that it's about not only thinking about the idea to convey, but we have to pull those out. I know that's where, again, a business analyst, I have to ask those questions because sometimes it's just like, oh, if it just could only just do this one thing better. That's not what you're asking me for. I know that that's not what you're asking me for. You just want it easier, but easier in what way? And we have to be starting to ask those questions like how and why. What do you need it to do? Really need it to do? What's the expected? If it does it like this, is that okay? Or is it like that? These are the kind of things that we really have to start training our brains and ourselves to even ask those kind of questions. I ask those questions every single day of everything because it's my job, but that's not normal in a sense. But now as we create these things and as we're looking at things, in order to participate in them successfully, we do have to start critically asking those questions because it is, what is it in for me? Just because it does that really have any impact? Because sometimes it doesn't. There are certain things that just have no value. Like I don't watch TV, so nothing about my TV enthuses me. I don't need anything. I don't need it to talk to me. I don't need it because I don't turn it on.
But let our Zoom not work and see how quickly Cherie melts down.
That's critical to you.
It is critical. Yes.
My phone better not glitch, better not move, better not even halfway glitch. Oh no, that caused me because my whole life is on that phone. So those are those kind of things that I think we need the relativity, the ability to express ourselves with regard to it, but also to actually engage with it, because the solution comes from you engaging in it, not just creating something just to create it. It doesn't have any value.
Yes, indeed.
Right. Well, we're going to wrap up. So any final words that we have for the family?
That's all
I
have.
do want to remind people, February 19th and 20th of 2021, Black Blockchain Consultants will have our 2-day, I'm going to call it a retreat, not a conference, a 2-day retreat. If that's probably a better word, in Los Angeles. The only way that we will cancel it if there is an act of God or this COVID thing isn't wrapped up. Other than that, we will be there. So Tangi's saying awesome conversation. DeAndre and Facebook is talking about critical thinking and communication equals understanding. Jeff is saying, I need a BBC mask. Well, we'll see what we can do.
Okay.
We'll see what we can do to get you a BBC mask.
Awesome. Oh my
T-shirt. That's all I'm asking for.
you guys in these T-shirts. I mean,
I need a T-shirt.
we will work on getting. We will definitely work on getting a BBC T-shirt this year. Anybody else have anything else before we let you go?
I just totally want to remind people to come on to blockchainstudies.tech and leverage all of this wonderful information that you've learned about blockchain technology and show up and let it show on your LinkedIn profile.
$20 worth of Bitcoin.
Oh yeah, and they got the Bitcoin incentive there and the challenge that we put out here too. So, but really, when you get that LinkedIn profile optimized, you would be absolutely surprised at what gets pushed to you. You know,
That's
because
true.
now you've put yourself in a position for the algorithms to pull for you. And you know, it's our time, Black people. People are looking for us.
It is. They
know,
are
so-
looking for us.
Yes,
Yes, I mean, so many people are. I reach out to them and say, "Hey, would you come talk to BBC?" And immediately, yes. You know, I didn't know you guys were here. So yes, and in a way, you'll probably be more favored to get jobs and opportunities because of. And I say use it. I
know
use
that's
my
right. Let it
gender,
work
I
for
use
us.
my race, I use it all.
Time to get found.
Yes.
You're out here. You're just not like lost in the sauce, but now people are looking for you. Take full advantage of that.
Take advantage of it, yes, because this is temporary. What's happening is temporary.
Ride the wave, friends.
Yes, so it could be gone in the next 3 months. So take advantage of it now. $20 worth of Bitcoin to the most dramatic change of before and after on your LinkedIn profile based on the LinkedIn blockchain course that LinkedIn blockchain course that we have at blockchainstudies.tech. So you have the month of July. So today is July 1st. You have through July 31st to get your entries in. And on August 1st, 2nd, 3rd-ish, we will come up with a winner. All right, everybody. God bless you. Have a great evening. Take care and be blessed.
Be blessed indeed.
See you, everybody.